let us take the next illustration where the question is journalize the following transaction in the journal of Goel brothers and post them to the ledger. So now first we have to prepare a journal account. Let us take the format first: date, particulars, ledger folio, debit, credit. So now in this particular ledger account we have to post the journal entries. So now coming to the first transaction we have on Jan 1st. So the transaction here is started business with cash 1,65,000. So here the business was started with a cash of rupees 1,65,000. So here one side the cash is entering into the business and it is entering towards the capital. Let us take journal entry for this. The date will be Jan 1st and the entry will be cash account debtor to capital account, 1,65,000 debit and 1,65,000 credit. Narration: being business started with a capital of rupees 1,65,000. Let us take the next transaction which we have on Jan 2nd. So here the transaction is opened a bank account in Punjab National Bank. Amount is given 80,000. So here the bank account was opened. So cash is going outside the organization and it is going towards the bank. So journal entry for this will be date Jan 2nd. So here bank account debtor to cash account, 80,000 debit and 80,000 credit. Narration: being an account opened with Punjab National Bank. Let us take the next transaction which is on Jan 4th. So the transaction here is goods purchased from Tara 22,000. So here whenever the particular dealer's name or whenever a particular trader name is given here, it is nothing but the transaction is on credit. So here in journal account we are going to show that particular trader's name. It means that the purchase was done on credit. Let us take in the journal account. The date is Jan 4th and the entry will be purchases account debtor to Tara account, 22,000 debit and 22,000 credit. Narration: being goods purchased from Tara on credit. Next transaction we have on Jan 5th. Goods purchased for cash 30,000. So here the goods were purchased for cash 30,000. So whenever the goods were purchased for cash, the cash will be credited here instead of the trader's name. Okay, it means that the goods were purchased on cash. Let us take in the journal account. Date will be Jan 5th and the entry will be purchases account debtor to cash account, 30,000 debit and 30,000 credit. Narration: being goods purchased for cash. Let us take the next transaction which is on Jan 8. So the transaction here is goods sold to Naman 12,000. So here we are going to sell the goods to a person called Naman. It is nothing but the goods were sold on credit to the Naman. Let us take the journal entry for this. Date will be Jan 8. Naman account debtor to sales account. So 12,000 debit and 12,000 credit. Narration: being goods sold to Naman on credit. Let us take the next transaction which we have on Jan 10th. So the transaction here is cash paid to Tara 22,000. So here when coming to the transaction, the cash was paid to the Tara. One side the cash is going outside the organization, another side Tara is the receiver. So we are going to follow the two golden rules here. One is for personal account where the person is Tara, here debit the receiver, and again another side the cash is we are going to follow the real account rule here because cash is an commodity here, debit what comes in, credit what goes out. So let us take the journal entry for this. Date will be Jan 10. So the entry will be Tara account debtor to cash account, 22,000 debit and 22,000 credit. Narration: being cash paid to Tara. Next entry we have on Jan 15th. So the entry here is cash received from Naman 11,700 and discount allowed 300. So here when coming to the sales made, we made a sales on the credit for which we have to receive the cash from Naman. Instead of receiving 12,000, we are receiving only 11,700, 300 we are going to allow as a discount. Let us take journal entry for this. Date will be Jan 15th and the entry will be cash account debtor in the debit column 11,700, again discount allowed account debtor 300 and to Naman account 12,000 in the credit column. Narration: being cash received from Naman and allowed a discount of rupees 300. Next transaction we have on Jan 16. So the transaction here is paid wages 200. So when coming to the wages, it is an expenses, we are going to follow the nominal rule. Nominal rule here is debit all expenses and losses, credit all incomes and gains. So wages is an expenses, we are going to debit this and we are going to pay in the terms of cash, the cash will be credited. So let us take in the journal account, date will be Jan 16th, wages account debtor to cash account 200 debit and 200 credit. Narration: being wages paid in cash. Let us take the next transaction which is on Jan 18th, furniture purchased for office use 5,000. So here the furniture was purchased for office use. One side the furniture is entering into the organization, real account rule applies here, debit what comes in, the furniture is coming inside. For the same furniture we are going to make the payment in cash, the cash is going outside, credit what goes out. So here journal entry for this will be on the date Jan 18th, furniture account debtor to cash account 5,000 debit and 5,000 credit. Narration: being furniture purchased for office use on cash. Let us take the next transaction which we have on Jan 20th. Withdrawn from bank for personal use 4,000. So here drawings were made and it is for personal use. Again the drawings were made from the bank. Let us take the journal entry for this. Jan 20th, drawings account debtor to bank account 4,000 debit and 4,000 credit. Narration: being cash withdrawn from bank for personal use. Let us take the next transaction which we have on Jan 22nd. Issued check for rent 3,000. So ultimately it's nothing but here the rent was paid through a check. So here again rent is an expenses which should be debited and it is paid through check, the bank will be credited. Let us take in the journal account, date Jan 22nd, rent account debtor to bank account 3,000 debit, 3,000 credit. Narration: being rent paid through a check. Let us take the next transaction which we have on Jan 23rd. So the transaction here is goods issued for household purpose 2,000. So here the goods were issued for the household purpose. So here anything which is withdrawn from the business in terms of commodity or in terms of product, that will be considered from the purchasers and not from the sales. Why means when coming to the purchasers we are not going to add any profit to the purchasers, but when coming to the sales the profits will be added to the sales. Anything which is withdrawn by the proprietor in terms of commodity or in terms of the material, that will be considered as a purchase. It will be considered from purchasers because it is for a personal use, in that the proprietor is not going to consider the profit. So let us take the journal entry for this. Date will be Jan 23rd, drawings account debtor to purchases account 2,000 debit, 2,000 credit. Narration: being goods issued for personal use. The next transaction we have on Jan 24th, where the transaction is withdrawn cash from bank for office use 6,000. So here the cash was withdrawn from the bank for office use. This will not be considered as a drawing. This will be considered only as a withdrawn cash from the bank. So here real account rule applies, debit what comes in, credit what goes out. So here the cash is entering into the business and it is taken from the bank will be credited here. Let us take the journal entry for this. Jan 24th, the entry will be cash account debtor to bank account 6,000 debit and 6,000 credit. Narration being cash withdrawn for office use. Next transaction we have on Jan 26th, commission received 1,000. So here when coming to the commission received, it is nothing but we are receiving a commission which will be a income to the organization. So now when coming to the income, again nominal account rule applies here, debit all expenses and losses, credit all incomes and gains. So here the commission will be credited. So let us take the journal entry for this. Date will be Jan 26th and the entry will be cash account debtor to commission account 1,000 debit and 1,000 credit. Narration being commission received. Let us take the next transaction which we have on Jan 27th. Bank charges 200. So here bank charges is an expenses which should be debited. So let us take the journal entry for this. Date will be Jan 27th. Entry will be bank charges account debtor to cash account 2,000 debit and 2,000 credit. Narration being bank charges paid. So now we are done with the journal account. So now once we are done with the journal account, we have to start posting these journal entries to the ledger account. So now when coming to the journal account, we have many entries over here. For each entry we have to prepare a individual ledger account. So now let us take capital first and we will prepare a ledger account for the capital. So the format will be date particulars amount, table name capital account. So now when coming to the capital, we have an entry relating to the capital on Jan 1st. So the entry here is cash account debtor to capital account. So 1,65,000 was the capital which was introduced in the business. So now when coming to the capital here, the capital was credited and it is towards the cash. So now when coming to the ledger account, we are going to take in the credit side on the same date Jan 1st by cash account 1,65,000. So now apart from this capital, we don't have any capital in the journal account. So we have to close this particular account here itself. So the same 1,65,000 what we have in the credit side, we have to take the same total in the debit side in the same line 1,65,000 and again in the debit side in the same line in the amount column 1,65,000. So now in the above we don't have any values, so we will be getting the same value over there 1,65,000, that will be to balance carried down and it will be on the end of the month 31st Jan to balance carried down 1,65,000. So this is what the capital account. Let us go for the next ledger account which we have to prepare for a cash. So now again the format remains the same, date particulars amount, in the left hand side DR and in the right hand side CR. It's nothing but debit and credit, table name will be the cash account. So now in journal account, wherever we have cash, that particular cash will be posted to the ledger account. So let us start from the first entry from the journal account. Wherever we have cash, we are going to post to that same to the ledger account. So now coming to the first transaction or coming to the first entry in the journal account, we have on Jan 1st. So the journal entry here is cash account debtor to capital account 1,65,000 debit and 1,65,000 was credit. So here the cash was debited and it is towards the capital. So now what cash was debited here, the same we are going to take in the cash account, but the same name we are not going to repeat. So the cash against which was debited, the same entry will be taken here. So now in journal account the cash was debited and this debited cash will be directly posted to the cash account in the debit side, same date Jan 1st to capital account 1,65,000. So coming to the second entry, we have on the Jan 2nd bank account debtor to cash account 80,000. The cash was credited here and it is against the bank. So in the credit hand side we are going to take Jan 2nd by bank account 80,000. Again coming to third transaction, we have on the Jan 4th purchases account debtor to Tara account. We don't have any cash transaction here, so we are not going to post anything over the cash account. In the next transaction we have purchases account debtor to cash account. So here again we have a cash which was credited against the purchases. So again in the credit hand side Jan 5th by purchases account 30,000. Then again coming to the next transaction, we have on the Jan 8th Naman account debtor to sales account. So there is no cash, no need to take this entry. Again the next is Jan 10th Tara account debtor to cash account 22,000. So here the cash was credited, so we are going to take in the credit side Jan 10 by Tara account 22,000. Let us see in the next transaction. Next transaction we have on Jan 15th cash account debtor, discount account debtor to Naman account. So here the cash was debited and it is debited against the Naman. So in the debit hand side we are going to take to Naman account 11,700. So the date will be Jan 15th. So let us take the next transaction which we have on Jan 16th. Wages account debtor to cash account. So the amount is 200. So cash is credited here, in the sense you are going to take in the credit side. So date will be Jan 16th by wages account 200. So next transaction we have on Jan 18th furniture account debtor to cash account 5,000. So again the cash was credited here, it nothing but the payment was made. So since it is going to consider in the credit side, the payment was made towards the furniture. So in the credit side date Jan 18th by furniture account 5,000 in the amount column. Let us take the next transaction which we have on Jan 20th drawings account debtor to bank account. So here there is no cash account, no need to take this entry. Next entry we have Jan 22nd rent account debtor to bank account. So again there is no cash, no need to post anything from this. Then again we have Jan 23rd drawings account debtor to purchases account. So again there is no existence of cash, no need to copy anything. Then again we have the next transaction on Jan 24th cash account debtor to bank account 6,000 was the amount. So here the cash was debited and it is debited towards the bank. So in the debit hand side we are going to take Jan 24th to bank account 6,000 in the amount column. So the next transaction we have on the Jan 26th. So where cash account debtor to commission account. So where the cash was debited, again the commission was received. Since it will be taken in the debit side, so date will be Jan 26th to commission account in the amount column 1,000. Next entry we have on the Jan 27th bank charges account debtor to bank account. So again there is no existence of cash, no need to post anything to the ledger account. Let us take the next entry which we have on Jan 28th insurance premium account debtor to bank account. So again there is no cash, no need to post anything from this. Then again we have the next entry on Jan 29th. Salary account debtor to cash account. So here the cash was credited, it's nothing but the salary was paid. So this will be taken in the credit side. So date will be Jan 29th. By salary account in the amount column 7,000. So the last entry we have on the Jan 30th, cash account debtor to sales account. So here the cash was debited, it's nothing but the cash was received against the sales. So this will be taken in the debit side. So the entry will be on date Jan 30th to sales account amount 10,000. So now once we have copied all the entries to the cash account, we have to balance this. So now let me repeat once again, whatever entries we have in the debit side, it is nothing but the cash which is entering into the organization, and whatever entries we have in the credit side, it is nothing but whatever the cash was going outside the organization. So here we are going to follow the real account rule, debit what comes in and credit what goes out. So here whatever entries we have in the debit side is nothing but what cash we received, and whatever entries we have in the credit side is nothing but what payments we have made. So now we have to close this particular account, we have to close the total of both the side. Okay, so which side we have excess total, that we have to take first. So let us take in the debit side, we have capital 1,65,000, then we have Naman account 11,700, then we have bank 6,000, then we have commission 1,000, then we have to cash sales 10,000. So here debit side total is coming 1,93,700. So now debit side total is excess because the capital was taken in the debit side, so obviously the debit side total will be more. So same 1,93,700 should be taken in the credit side in the same line 1,93,700. From this we are going to deduct, or from this we are going to minus all the entries which we have in the credit side. The concept here is what cash we have, the total cash what we have with us, out of this cash what payments were made, that will be deducted. So let us see in the credit side what entries we have. So we have by bank account 80,000, then we have by purchases 30,000, then we have by Tara account 22,000, then we have by wages 200, then we have by furniture 5,000, then by salary 7,000. So now once we deduct all this entry, the balance will be 49,500. So this is nothing but by balance carried down. So the date will be Jan 31st, by balance carried down 49,500. So here we are done with the ledger account of the cash account. So let us take the next account which we have to prepare. So let us start from the first journal entry. So where we have to prepare a journal account, where we have to prepare a ledger account for the bank account. So now in particular journal account, wherever we have bank, the same entries will be posted to the bank account. So let us take the format first. Title will be bank account, the format will be date particulars amount, date particulars amount. In the left hand side debit and in the right hand side credit. So let us start from the journal account. Coming to the second entry which we have on Jan 2nd. So the entry here is bank account debtor to cash account 80,000. So here the bank was debited, so this entry will be posted directly to the debit side. So in the debit side the date will be Jan 2nd to cash account 80,000. So next entry we have on Jan 4th, where purchases account debtor to Tara account. So there is no existence of bank, we are not going to post anything from this to the ledger. Let us take the next transaction which we have on Jan 5th, where the transaction is purchases account debtor to cash account. Again there is no bank, no need to post anything from this. Then the next entry we have on Jan 8, Naman account debtor to sales account. Again there is no bank. Then we have on Jan 10, Tara account debtor to cash account. Again there is no bank. Again in the next transaction which we have on Jan 15, cash account debtor, discount account debtor to Naman account. So there is no existence of bank. Again, let us take the next entry which we have on Jan 16th, wages account debtor to cash account. Again there is no bank. Next we have Jan 18th, furniture account debtor to cash account. So again there is no bank, no need to post anything from this particular transaction to the ledger. Next entry we have on Jan 20th, drawings account debtor to bank account 4,000. So here the drawings were made from the bank. So bank is credited here. It is nothing but the cash is going outside the bank. So this should be credited. So now the bank is in the credit here. So directly it will be posted to the credit side. The date will be Jan 20th by drawings account 4,000 in the amount column. Next entry we have on Jan 22nd, rent account debtor to bank account. So 3,000. Again the bank was credited here, which means the rent was paid through a check or the rent was paid by the bank. So here the entry will be taken in the credit side of the bank account. So date Jan 22nd by rent account 3,000. So let us take the next transaction which we have on Jan 23rd, drawings account debtor to purchasers account. So there is no existence of bank. We are not going to post this to the ledger. Next entry we have on Jan 24th, cash account debtor to bank account. So again the bank was credited here, which means the cash was withdrawn from the bank. So again this particular entry will be posted to the credit side. The date will be Jan 24th by cash account amount column 6,000. So next transaction we have on Jan 26th. So the transaction here is cash account debtor to commission account. So there is no existence of bank. Let us see the next transaction which we have on Jan 27th. Bank charges account debtor to bank account. So again the bank charges were paid by the bank. So here again this entry will be taken in the credit side. The date will be Jan 27th and the entry will be by bank charges account in the amount column 200. So next transaction we have on Jan 28. So here insurance premium account debtor to bank account. So the insurance premium was paid through the bank, which is 3,000. Again this entry will be taken in the credit side. Date will be Jan 28 by insurance premium account in the amount column 3,000. So coming to the next entry we have salary account to cash account. There is no bank again. And the last entry we have in Jan 30th, cash account debtor to sales account. So here we have done with the posting of bank entries from the journal to the ledger. So now we have to close the ledger account. So let us come for the bank account. We will see that what entries we have in the debit side and what entries we have in the credit side. So coming to bank account, we have only one entry in the debit side where the cash was deposited into the bank 80,000. So now whatever we have in the bank, that is going to show in the debit side. Out of that particular deposited amount 80,000, what payments we have made through the bank, that will be in the credit side. So the concept is very clear here. What bank balance we have and what are the expenditures paid and what is the leftover cash we have in the bank. So now in the debit side we have 80,000 and coming to the credit side we have the less amount. So the debit side total is excess, the same total should be taken in the both the side. 80,000 in the debit side, in the same line in the credit side 80,000. So now from 80,000 we are going to deduct all the above entries where we have drawings 4,000, rent we have 3,000, cash we have 6,000, then again bank charges 2,000, insurance premium we have 3,000. So now once we deduct all these above entries from 80,000, the balance will be 63,800. So date will be here Jan 31st by balance carried down 63,800. It means that out of 80,000, after making all the payments, the leftover bank balance is 63,800. So now we are done with the ledger account of capital. then we are done with the cash account, then we are done with the bank account. So now next account we have to prepare for Tara. So now the format remains the same, date particulars amount, date particulars amount, in the left hand side debit and in the right hand side credit, table name Tara account. So now coming to the journal entries, wherever we have transaction with the Tara, that particular transaction have to be posted to the Tara account. So now coming to the journal account, we have only 2 transactions with the Tara. So now one transaction which we have on Jan 4th, where purchases account debtor to Tara account. So there Tara was credited, so we are going to take in the credit side Jan 4th by Tara account 22,000. And another journal entry we have on Jan 10th. So the entry there is Tara account debtor to bank account 22,000. So now that particular entry was debited there, the Tara was debited, and here we are going to post that entry to the debit side. Date will be Jan 10th to bank account 22,000. So we have only 2 transactions here. Then we will close this ledger account. We are going to take the total of both the side, where we have 22,000 in the debit side and in the same 22,000 in the credit side. So let us come for the next account which we have to prepare for purchases. So now again same format, date particulars amount, date particulars amount, debit side, credit side, table name purchase account. So now coming to purchase account, when coming to the journal account, we have only 3 entries which should be posted to the purchase account. So first entry we have on Jan 4th, where the entry was purchases account debtor to Tara account 22,000. So now the purchases was debited there, and the same should be taken in the debit side of the purchase account. So date will be Jan 4th to Tara account 22,000 in the amount column. And next transaction we have on Jan 5th, where purchases account debtor to cash account. Again purchases was debited there and the amount was 30,000. Since the purchases was debited, we are going to take in the debit side. Date will be Jan 5th to cash account 30,000. Why we are going to take cash here is the purchases was debited against the cash, which means the purchases were made for cash. That particular entry was taken in the debit side. And one more transaction which we have on Jan 23rd, where the entry is drawings account debtor to purchases account. So where the purchases were credited and it is against the drawings, which means the drawings were made for the personal use in terms of the commodity or in terms of the material. So where the cash was credited, that should be posted to the credit side of purchases account. So the date will be Jan 23rd to drawings account 2,000. So now once we are done with the posting of journal entries to the ledger, we have to close this particular ledger account. So debit side total was excess 22,000 plus 30,000, will be getting 52,000. Same 52,000 we have to take in the credit side. 52,000 minus 2,000 will be getting 50,000. So here the date will be Jan 31st to balance carried down 50,000. So here we are done with the purchases account. So let us see the next account which we have to prepare. We have to prepare an account for the sales. So now we have to prepare the ledger account for sales. Again format remains the same, date particulars amount, date particulars amount, debit side, credit side, and in the center of the table the title will be sales account. So now coming to the sales, we have only 2 transactions which is relating to the sales in the journal account. So first transaction we have on Jan 8, where the transaction is Naman account debtor to sales account. So where the sales were credited and it is against the Naman. So this particular entry should be posted to the credit side of the sales account. So the date will be in the credit side Jan 8 by Naman account 12,000. And the next transaction we have on Jan 30th, cash account debtor to sales account. So where the sales were credited again, so that should be posted to the credit side. So Jan 30th by cash account 10,000. So since we have only 2 entries here, we have to close the account here itself. So credit side total will be 12,000 plus 10,000, will be getting 22,000. Same 22,000 we have to take in the debit side. 22,000, the same value will be for the carried down. So Jan 31st in the debit side, 2 balance carried down 22,000. So here we are done with the sales account. So let us see the next account which we have to prepare. Next account we have to prepare for a Naman. So again coming to the Naman, the format remains the same: date, particulars, amount, date, particulars, amount, debit side, credit side, title of the table, Naman account. Coming to Naman account, we will see in the journal account, wherever we have entries or wherever we have transaction with the Naman, the same will be posted to the ledger account. So now coming to Jan 8, we have a transaction where Naman account debtor to sales account 12,000. So where we have a sales which was done with the Naman, where the amount is 12,000. So now Naman account was debited in the journal. So this entry will be posted to the debit side of the Naman account. So the date will be Jan 8 to sales account 12,000. So next entry we have on Jan 15th, where the journal entry is cash account debtor, discount allowed account debtor to Naman account. So Naman account was credited here. So the same should be taken in the credit side. So the date will be Jan 15th by cash account 11,700. Then again same date Jan 15th by discount account 300. So only we have 3 entries which should be taken from the journal account. So let us take the total for both the side. Debit side we have 12,000. Again in the credit side we have 11,700 plus 300, 12,000. So same total for both the side. So here we are done with the Naman account. Next account we have to prepare for a discount. So again the format remains the same: date, particulars, amount, date, particulars, amount, title of the table, discount account, debit side, credit side. So now coming to the discount, only once we are going to allow the discount in this particular journal entries. Okay, let me repeat once again. When coming to the journal entries, only once we had allowed the discount for Naman. The same should be posted to the discount account. So coming to the discount entry, discount allowed account debtor to Naman account, which is on Jan 15th. So where the discount allowed was debited, since the entry should be posted in the debit side. So let us take in the debit side Jan 15th to Naman account 300. So same total you are going to take in the credit side, 300 in the debit side, same in the credit side 300, and the above that Jan 31st by balance carried down 300. So next account we have to prepare for wages. Again same format, where the format remains the same. Again title will be wages, then date, particulars, amount, date, particulars, amount. Left hand side DR and in the right hand side CR. So coming to wages, we have only one entry, or we have only one transaction which is on Jan 16th, where we are paying wages in cash. So entry on the Jan 16th is wages account debtor to cash account 200. So now wages were debited in the journal account, since this particular entry should be posted in the debit side of the wages account. So the date will be Jan 16th in the debit side, entry will be to cash account 200. Then we are going to take the total of debit side 200 and the same in the credit side 200, and above that Jan 31st by balance carried down 200. Let us take the next account which we have to prepare for furniture. So coming to furniture, again format remains the same: date, particulars, amount, date, particulars, amount. and in the left hand side DR, and in the right hand side CR. So coming to furniture, we have only one transaction which is relating to the purchase of furniture, which is on Jan 18th, where the journal entry is furniture account debtor to cash account. The amount is 5,000. Since the furniture was debited, the same we are going to take in the debit side of the furniture account. So the date will be Jan 18th to cash account 5,000. So since we have only one entry here, we are going to close this account here itself. Same total 5,000 in the debit side and the same total in the credit side 5,000. So above that, Jan 31st by balance carried down 5,000. Let us see the next account which we have to prepare. We have a account of drawings. So coming to journal entries, we have drawings for which we have to prepare a ledger account. So again title will be drawings account, date particulars amount, debit side, credit side. So coming to drawings, we have two drawings in the journal account. So one we have on the Jan 20th and another we have on Jan 23rd. So Jan 20th we have entry drawings account debtor to bank account. So where drawings were debited, we are going to take in the debit side of drawings account Jan 20th to bank account 4,000. And the next entry we have on Jan 23rd where drawings account debtor to purchases account 2,000. Again the drawings was debited, since we are going to take in the debit side Jan 23rd to purchases account 2,000. So now we are going to close this ledger. 4,000 plus 2,000, 6,000, the total of debit side. The same total should be taken in the credit side 6,000, and above that Jan 31st by balance carried down 6,000. Next account we have to prepare for rent. So now again format remains the same, title rent, date particulars amount, debit side, credit side. So only one entry we have which is relating to the rent, which is on Jan 22nd. Rent account debtor to bank account. So where rent is debited, that should be posted to the debit side of the rent account. So date will be Jan 22nd to bank account 3,000. Then total of debit side 3,000, same total in the credit side 3,000. Then above that Jan 31st by balance carried down 3,000. Next account we have to prepare for commission. So again format remains the same, date particulars amount, debit side, credit side, title, commission account. So now coming to journal entries, only once we are receiving the commission where commission was credited, since the entry should be posted in the credit side. Let me repeat once again. Relating to the commission, we have entry on Jan 26th where cash account debtor to commission account. So commission was credited, that should be taken in the credit side of commission account. So date will be in the credit side Jan 26th by cash account 1,000. Then total of credit side 1,000, same total in the debit side 1,000. Then above that 31st Jan to balance carried down 1,000. Next account we have to prepare for bank charges. So coming to bank charges, the format remains the same, date particulars amount, So now coming to bank charges, we have only one transaction or we have only one journal entry that should be posted here. That entry is on Jan 27th, bank charges account debtor to bank account. So bank charges were debited and that should be posted to the debit side. So the amount is 200. So coming to bank charges account in the debit side Jan 27th to bank account 200, and we are going to take the total of debit side 200 and the same total in the credit side 200. Above that Jan 31st by balance carried down 200. So next account we have to prepare for insurance premium. So now again the format remains the same, date particulars amount, debit side, credit side, title of the table insurance premium. So now coming to insurance premium, we have only one journal entry relating to the insurance premium that should be posted to the insurance premium account. So the entry is on Jan 28. So insurance premium account debtor to bank account 3000. So now insurance premium was debited against the bank. So the debited insurance premium was debited, it should be taken in the debit side. The date will be Jan 28 to bank account 3000, and that we are going to take the total of debit side 3000, same in the credit side 3000, and above that Jan 31st by balance carried down 3000. Let us take the next account which we have to prepare for is salary. So title will be salary account, format date particulars amount, date particulars amount, debit side, credit side. So coming to salary, we have only one journal entry which is on Jan 29th. Salary account debtor to cash account. Since the salary was debited, that should be taken in the debit side of the salary account. So date will be Jan 29th to cash account 7000. So since we have only one entry, we are going to close this account here itself. 7000 the total of debit side, same total we have to take in the credit side in the same line 7000, then above that Jan 31st by balance carried down 7000. So here we are done with the following ledger accounts.